Good afternoon. Welcome and thanks for joining us. I'm your host, Jesse Redband, Head of Investor Relations and Business Development at LEEF Brands. I'm joined today by our CEO, Micah Anderson. Micah, how are you?
I'm good.
We also have our all-star CFO, Kevin Wilson. Kevin, what's happening?
Feeling like an all-star.
I thought you'd like my flattering introduction. Today, we'll have an earnings review for the second quarter of 2025, recap our recent first harvest at Salisbury Canyon Ranch, and update you on our progress in New York. You can find our earnings report on the investor relations page of leafbrands.com, as well as on the company's social media pages. Let's jump into the agenda. Kevin, this is a transitional and seasonally softer quarter for LEEF. During the first half of 2025, we made several significant announcements that will shape the future of LEEF, including the launch of our new farm, Salisbury Canyon Ranch, and the successful closing of our New York license. These key additions will begin to benefit the business in this quarter, Q3 2025. So we encourage investors to look at LEEF with a forward-looking perspective rather than extrapolating recent results. With this as context, let's walk through the latest quarter, and then we can turn our attention to how the business will evolve moving forward. So Kevin, let's kick it off with you. Maybe you can give us an overview of the results, starting with the top line.
Yeah, I think you summed it up very well there. So we did about $8.7 million in the third quarter, or second quarter rather, which was a 10% increase from the second quarter of 2024, and just a hair shy of the second quarter of 2023, which had record revenue. That quarter, we also had significant CPG sales as well. So when we were exiting that CPG market. So about 10% increase in top line on about 20% increase in unit growth year over year. So we're seeing higher unit sales at a bit of a softer price. So we're very, very happy with sales. Puts us at about $18 million for the year versus about $16 million last year. So about a 15% increase on a year over year to date basis. I think the mixed results come in on the gross margin. So we did a gross margin of 24% for the quarter versus 34% last year. And I think, as you mentioned, and we'll touch on in a second, we had a very successful harvest at Salisbury Canyon, and we're going to start seeing the results of that primarily in the margin on a go-forward basis. Adjusted EBITDA of a loss of $1.2 million versus $300,000 in the same quarter last year reflects that softer margin. So as we bring on this new harvest, and that'll affect the margin on a go-forward basis, that'll also affect our EBITDA.
Yeah, let me dig in on the margin thing a little bit, Kevin, because I think this is a nuanced topic. In that, one of the things that I didn't know about California when I before I got familiar with LEEF is that while we talk about an oversupply of cannabis in California, specifically cannabis flower, that doesn't mean there's an oversupply of clean material for extraction. Do you want to touch on how much of the material that we test as flower doesn't pass when concentrated, and how that higher input costs for that clean material can impact the margins along with the prices that we're selling things at?
Yeah, it's about a 60-40, about 40% of what we test, we don't end up purchasing. And so we do incur significant testing expenses in relation to that. We also have significant transportation and distro costs associated with that. We go to the farm, we test it, we bring it back. And so as part of, being able to run our own material at a significantly reduced cost, which we can touch on in a second, we're going to start to see those auxiliary costs come down as well. We have more of our own material from our own farm, and so we're going to have to rely less on that external market. We've been purchasing material, depending on the extraction line, anywhere between $20 and $30 a pound, sometimes a little higher. Based on our first harvest, we were in the $8 to $10 range on our cost per pound. So a significant difference that we're going to start seeing. It takes time. We started our harvest on June 30th. Took a few weeks to get everything out of the field. Takes a few more weeks to turn it into oil and put it in the customer's hand. And that's where we're at right now, is starting to do those sales off the oil that materialized off the field. So to your point earlier, we're going to start seeing that impact, that specifically in the margin in this third quarter and into the fourth.
Yeah, so Kevin, I think when you called it a mixed quarter, I think that's a good way to frame it. And just to reiterate for investors that might be joining late, so when you think about the mixed quarter, Kevin, is it fair to summarize it as stronger on the top line, weaker on the margin side, the gross margin side, which then flowed through to EBITDA, but the gross margin side, we'll get into this later, but help is on the way.
Yeah, absolutely. It's we're priming the pumps on the top line in order for our material to start coming through. So we should start having that here in the next quarter.
Awesome. Well, Michael, let's turn our attention to how things are going to evolve moving forward. And we've been busy the first half of the year. Like, I was so excited to join the company. I covered LEEF last year as an analyst at Water Tower Research, was thrilled to join full time this year. And, you know, I think the reason you wanted me to join, the reason I was so excited about is because of how much stuff we have going on this year and how much this business is going to change. And investors probably have seen a lot of activity from us in the first half of the year. And what's cool about it is we made the announcements. Those aren't reflected in the second quarter numbers or the first quarter numbers, but those are going to really start to impact things moving forward. So I think Q3, Q4, and into 26, we're going to see a lot of changes with LEEF. So why don't we set the table for what the rest of the year is going to look like by reviewing the significant accomplishments during the last couple of quarters, especially during the second quarter. You want to kick us off, Micah? I think the biggest thing, well, it's a tough one. There were a couple of big ones, but certainly one of the most important was planting Salisbury Canyon Ranch.
Yeah, I think that's got to be at the top of the list. You know, we spent the better part of roughly 4 years going through that process, and it was a big bet. Our belief was that we needed to verticalize the business just for margin profile in the long run. As Kevin spoke to it earlier, just spot purchasing from around the state, it's worked so far, and we're still going to lean on a lot of those relationships that we've had, but we got to the point where we're like, the size of the business, it's gotten to the point where we need to bring this in-house, or at least a large portion of it. So I think the risky thing for us was just not only getting through the licensing process and all the environmental stuff and red tape that goes into that, but was just ending up with clean material. As Kevin said, 60% ish roughly fails throughout the state. And so we like to pull off that much clean material is a huge win for us. I think of successes, we spent 4 years, we spent a lot of money. We got to the point where we had a first harvest and are just now getting to the point where we're starting to see the sales. So yeah, it went well. The yields were good. The material is completely non-detect across the board, which is fantastic. It allows for us to really hone in like what's called a golden batch. You know, so it's 65-ish acres of the same exact genetic that is purposed for what we're doing versus little pockets of material from all over the place that are different, and you have to like kind of chase with the machines and the way that you're running it through the extraction process for yields and potencies. So we've really been able to kind of hone in on what's working. I mean, we're finding a lot of efficiencies that are beyond what we even thought we were going to find. So it's been super impactful. So SCR is definitely a win. This was our first year. Plan on expanding into the ranch. We have a 187-acre permit, of which we are using about 65 to 70 acres of. And so we've got some room to grow, and we'll scale into that over the next few years. New York being the second one, you know, so we spent 9 years in California kind of learning what we've learned and making, you know, mistakes and wins and all that. And we finally got to the point to where we feel like we could be successful moving into another market. We went through the acquisition process of a license, which allows for us to basically replicate the same business model in New York. So we will be doing concentrates through smaller versions of what we do in California. So starting a little bit on the smaller side, hopefully leveraging a lot of the relationships that we've built in California, giving us sales predictability as we move into the market. So we've been fortunate. Like a lot of the clients that we work with in California are doing quite well and have been, you know, they moved out of California before we did. And so we feel like we can leverage some of those relationships and we'll start seeing the impact of that. Q3 is when we'll start, Q4, and then I think, you know, 26 will obviously continue to scale. New York's exciting for us. I think it's going to be a huge market. A lot of our clients are there, which is great. Licensing and everything, it's a lot easier than California so far, from what we've experienced so far, which is great. So we think that we can win there. And so that's when I think of like the wins that we've had this year, SCR New York is one of them. We're like halfway through the lab build out process now. Be fully operational here pretty quick. So, and then
Yeah, one thing people often ask me, Mike, is how do you guys decide about new markets? And specifically, why did you guys decide to lean into New York? And I think it's worth highlighting, why we particularly picked that state. And you can comment, Micah. But when I think about New York, the things I like about it is it's a big market. It's expected to be about a $1.5 billion market this year, hopefully tipping over $2 billion next year. So just in terms of size and consumption, it's a big market. We also like markets where people use a lot of concentrates. That's our business, is making a full range of concentrates. And broadly, that's where the world is going. Like the old school people like me, we still like flower, but that's shrinking and getting smaller and smaller. And more of it's going towards manufactured products where people are using concentrates. So I think about things there like vapes are huge in New York, huge everywhere, but especially in New York. Edibles, same thing. Beverages getting to be a bigger category. Infused pre-rolls also getting to be a bigger category. And when you look at New York's market, about 55% of the market is manufactured products that use concentrates. So I think that's another thing that's great for us. Big market, ton of concentrates. And the third one, Mike, I think you touched on, which is worth highlighting, is that we're moving into a market with a built-in sales channel. A lot of the companies that are leading in New York are ones that came from California. The big vape companies, the big edibles companies, those are generally the leaders in that category in New York as well. So one of the reasons we went there was because we knew we had strong demand with that built-in sales channel. So I just want to kind of reiterate the framing for New York, and also, Mike, I think it's fair to say that moving forward, those are the traits we'll look for in new markets that we enter.
Yeah, I think you got them all. The one thing I would add to that is move into markets where we are able to replicate our business model. So there needs to be a supply chain. Being a large scale extractor the way that we are, you need to have the ability to access large outdoor cultivation. Indoor cultivation is problematic for our business in the sense that it's hard for brands to find the margins that they need if our input material is too expensive. Yeah. And New York has that. There's a few other markets that I think are potentials for us as well. And then you mentioned the client base. Let's make this as easy as possible on ourselves as possible. Do we have clients that are already there that are doing well? Yes. Is the regulatory system easier than California? Let's not go through another complete brain damage session trying to put together a Type 7 license. So, and the answer is yes, there in New York, and the supply chain side of it as well. I think that one thing I think that we think about, like when we're looking at moving into new markets, or just like what I see there being a benefit to what the way our business model is that if and when there is ever rescheduling or descheduling, and we're able to start shipping out of state, a lot of these moving into markets where there's a lot of indoor infrastructure, you're going to have a hard time competing with the companies that have the footprint that somebody like us or some of the other companies have. So it's just like making sure that we're avoiding that, I guess. And I feel like I'm stumbling as I'm trying to say that. But
no, I think that's a good point. And maybe just kind of taking it back to more of a 101 level. Generally speaking, making concentrates with indoor material is tough. Like if you want to make some super fire rosin and you can sell that at a premium, then maybe you can make that work. But is it fair to say, Micah, that most concentrates are made from sun-grown material?
Yeah, especially for our business model, yes.
Yeah.
Mm-hmm.
Okay.
Yeah.
So let's jump into the last point. I joined LEEF earlier this year, and if I could flatter myself, I would say that's one addition to the leadership team. But we've made some other progress in that area, and super excited about our new COO.
Yeah, we hired a guy named Josh Keats. Josh has been great. He's about 6 weeks into the role so far. Operations background, been in cannabis forever. I've known Josh for many years. He was the COO at Henry's, which is another local cannabis company up in Mendocino County. Eventually became the CEO, and has done a great job of running that business. He's great for what we needed, where he has a very scaled cultivation background. He's very good with operations, and he's got he's great with numbers, like modeling out. He's one of those guys who measures everything, and is very systematic when it comes to processes and procedures. So I think is a good addition for the team for us on the operations side as we start to scale this business and bring, you know, more and more stuff in-house. So yeah, he's 6 weeks in. I'd say he's a quick learner, doing great. Yeah, good. You were good. You were a good pick too, though, Jesse. I gotta say.
Thank you. I appreciate. I appreciate that. Yeah, and the other benefit of Josh is not just his skills, but he also frees you guys up to do what you do best. I know, you know, Kevin, you were really stretched for a while there, you know, trying to help out with things on the operations side more. So I think sometimes with leadership additions, we focus on just what that person can bring. But from my side, I'm already seeing an improvement too. But you guys being able to specialize in your areas, which is great as well.
Yeah,
Yeah, he's doing a great job.
Yeah, we've been actually discussing just that, like, what can you take off of all of our plates? And, you know, Jesse, we brought you on just to help with the message, doing exactly what we're doing, right? Like, you know, you've been great and you're good at it. And I definitely want to spend more of my time talking about the company and getting out more than I have in the past. So I think Josh will help freeing up some of the stuff that I was working on.
So let's kind of transition the conversation. We've recapped the quarter. We've recapped the accomplishments during the quarter. Let's dig in a little bit about where we go from here, which I think is the exciting part. And Mike, I'm going to circle back first to Salisbury Canyon Ranch. Do you want to recap us on the harvest, kind of reiterate what we planted, how much we planted, and kind of share what the results have been?
Yeah, sure. So, like I said, permit size 187, of which we are using about 65 at the moment. We planted all 65 acres and ran what's called like an auto crop. Basically, it's just purpose for oil. We harvested all of that in July, got it out of the field. We've replanted. We replanted with photoperiod genetics, more of a strain selection to give us, you know, a robust menu for the fall. You know, we run a lot of stuff through the hydrocarbon machines as well, and it's always good to have like a good terp menu, just different things that are on the menu versus just one particular strain. So it's kind of a different strategy in the fall than there is in the spring. We're fully planted, should be harvesting in October, you know, into November probably. Right back in the field with 65 acres. And yeah, you know, next year is going to be, we're constantly, you know, you got to be planning for next year already, the way that farming works, but hopefully expand a little bit if we can there. And definitely into 27, you know, it's like, we definitely want to figure out how do we maximize this and bring the whole thing online. So that's something that we're working on right now.
And for the nerds out there, and I'll raise my hand as being one of these nerds, let's just dig in a little bit in terms of what we planted, because I think that's kind of interesting. So you mentioned this term auto crop, Micah, and for people not as familiar, that's planting auto flowers, which are a way to get 2 harvests out of a sun-grown field. So basically, when you crack an auto flower seed, you start the countdown to how many days till harvest, and it starts going right into flower. So if you don't have a greenhouse or something else to do a light dep, this is a way to get 2 harvests, you know, 2 harvests out of a sun-grown field. And so we ran all one strain auto flowers, Micah, and those are purpose for all for distillate. Is that the idea there?
Correct. Yeah, just a genetic that everything's the same. It will finish automatically. That's, you know, where the term comes from. So it doesn't matter how many hours of light there are in the time of the year. So you can plant these at any given. It could be 24 hours of sunlight. You could, you know, I guess Alaska in the summertime, and they will immediately start flowering as soon as you put them out. And it's good because you know when they're going to finish, and they're high THC content. So it's like kind of the soil to oil farming. And so it's great for our business.
So 65 acres of one strain, purpose for distillate. You mentioned that golden batch concept. And the idea there again, guys, is that we're going to be running one strain so we can dial in those ethanol extraction machines for distillate, find out just how to turn the knobs, how long to run it, everything to get it dialed in, maximize our yields on that. And then when it comes to the fall, we can also grow some more material for distillate if we want, Micah, but we have 2 other lines. We have the ethanol line, which does distillate. We have the hydrocarbon line, which does things like live resin. And then we have the solventless line that does rosin. And one thing I learned just from growing in my backyard is something that yields for one type of extraction might not yield for the other type. And when I was screwing around growing in my backyard, I grew some stuff that to rosin yielded less than 1%. And I yielded some stuff that was closer to 5%. So that was a humbling experience to grow all this material and then end up with almost 0 rosin. So do you want to talk a little bit about the planting for the fall, Micah, and diversifying across strains that will work well for those extraction lines?
Yeah, no, you did a great job summing that up. Yeah, that's exactly right. So for our business, yields are everything, like yields and potency, obviously cleanliness of the material. So we hand select genetics that we know are going to work well through, whether it's the hydrocarbon line or through the solventless line. We also work with our clients just trying to get an understanding of like, what do they want? Is there evergreens that they want us to plant? And then we work with them on that. We'll plant like certain blocks that are purposed for certain clients. And it's something that you work on constantly. You're constantly working on improving that menu and which genetics do well in the region that you're farming in. So this is our first year. I think that over time that just gets better and better, and we'll start working on a breeding program where we're constantly like looking for new things that work well in the area, things that yield well through the 3 different extraction lines.
And the last question I have on the ranch, Micah, is we've had a lot of meetings where we were looking at spreadsheets and looking at different scenarios in terms of what yields might look like to do some business planning. And we had, what I'll call a bear case, a medium case, and then a bullish case. Do you want to talk a bit about the yield side of things and, if it met your expectations?
Yeah. They've done better than we expected, So yeah, we've been, we're leaning towards we're beyond the base case, which is great. Yeah. And the oil looks fantastic. It's like very, very clear. It passes, so in California, you've got like a pesticide screening panel that's put out by the DCC. And then there's a group that we're a part of called ECHO that takes it a step further and looks for, just adds another list of pesticides that the state isn't looking for. And the oil, everything passes both of those standards, which is great. So it's truly non-detect across the board. We're seeing higher than normal potencies, which is great. Typically when you're running oil to distillate, the goal is like, if I can be, between 90 and 95, that's great. Being on the like mid 90s to high 90s gets more challenging. Like you really need to have quality material to do that. And most of the material that we've seen come out of the machine so far has come out in that like 95% range, which is great. So yeah, commands a little bit of a higher price point. The fact that it's totally clean allows for a lot of these, especially vape companies that we're working with, are really doing a better job of screening their oil inputs. California has gone through a series of where people have gone in to kind of like police the industry a bit, just to see just to make sure that people are clean or pesticide issues. So it's been good in the sense that you've got a lot of companies that are paying more attention to it, which is great for our business. We have a big supply chain with something that is sought after now. So we're excited about it. It's good.
And do you think the above average or the above expectation really solid harvest results, Micah, are a product of the strain we chose? Things like the soil that we're growing in, we're putting plants in the ground in this case, rather than, using pots or rock wool or cocoa or anything like that. We're actually putting plants into the soil. Or do you think maybe it's a product of how much sunlight and the great, the great sun conditions at the farm, or is it really a combination of all these pieces coming together?
Yeah, it's a combination of everything. Cleanliness, in my opinion, really comes to like geographically where you're located. I think most farming practices in California as it relates to cannabis, like no one's using pesticides. Everyone knows what they're doing at this point, but they're still ending up with pesticide problems. And so it's like, well, why is that? And it's coming from the other ag uses in the state. This problem with ag, and this is one of the things that I hope that the cannabis industry does a good job of shining a light on for people to have a good understanding of this, is that the criteria and the standards that the cannabis industry is upheld to, none of the other ag industries have to adhere to any of that stuff. So, a vineyard down the road or whatever, pick the crop, almonds, doesn't matter, are spraying something, that pesticide gets sucked up into the air. It can travel miles sometimes down the road and end up on your crop. And these, we see it all the time where it's like, we'll have a farm that we've worked with for many years in a row. They've been, clean for 3 years in a row. And then the 4th year, it's like, what happened? Something happened. And then after they do a bit of research, you find out that it's like, oh, the neighbor down the road sprayed Myclo or something that that they didn't tell anyone that they were going to be doing it, ends up on their crop, and now they have crop damage. So that was definitely one of the things, we bought this, it's a big ranch. It's the total ranch size is 3,000 acres. We bought like 1,900 acres of that, but like the other 1,000 acres is like a buffer. There's no one there, and it butts up against 3 sides of a national forest. So there's truly no one around. When we started the company, and we were, I was personally going around to a lot of the farms, especially in the Santa Barbara area. So I was, built an awareness of like where the problematic areas are with pesticides. So when we found the ranch, it was like after doing one tour of it, I was like, there's no way that this thing's going to pop. This thing's going to be good. And we tested the soil, of course, and did some like early micro extractions on a lot of the shrubbery and stuff that was just on the ranch. That all came back clean. So it looked like all signs were pointing towards like, okay, we should have like a non-detect ranch here. And yeah, thank God that it came through and we were correct in that. So, but yeah, I don't know if I'm answering your question or not, but that's what happens with a lot of the other farms in the area. It's not their practices, it's the other ag practices that typically are where the problems come from.
Yeah, and if listeners didn't see it, we were featured in SF Gate with an article on LEEF brands and particularly focused on Salisbury Canyon Ranch. And the author, Lester Black, came out and spent the day at the ranch with us. And I think he really understood the story well. So if you want to dig in more to Salisbury Canyon Ranch and that pesticide problem and why having this clean source of cannabis is so important for the industry and so important for LEEF in particular, you can search around sfgate.com under LEEF brands. It's also pinned on my social profile if you go to X at Jesse Redmond. So I encourage you guys to check that article out that came out about a week ago. Kevin, let's transition to, I think, maybe the second most exciting, and it's a close runner-up, which is New York. We closed on our Type 1 license in June, and I know you've been busy making trips to New York and helping things get set up there. So why don't you let us know the state of affairs?
Yeah, closed on the license. That was a bit of a process, but we had a good partner on the other side. So closed on that. We immediately started to build out a small facility there. We've said this before, but it's a very asset light approach. We had a lot of the old equipment in California that wasn't quite to scale for California, but would fit in perfect in the New York market. So we shipped a lot of stuff east, and we're just starting to put everything together right now. We got the bones of everything. We're just kind of plugging everything in right now and going through commissioning and getting it all set up. And when it is, call it by the end of August, I would say, we'll have a solventless lab set up and we'll start solventless sales pretty quickly here. That's phase one. Phase two is to enter hydrocarbon and offer a full suite of products like we do in California. So our hydrocarbon products, distillate through that line, and of course retain the solventless. So aiming to have that online mid to the tail end of Q4, but we should see some meaningful revenue here in the tail end of the third quarter into the fourth quarter out of New York.
Okay, great. And Micah, this is going off script here, but I do have a question for you about New York. You mentioned the supply chain is so important, and coming into LEEF and understanding the extraction side better, it's just absolutely critical. The same way if you're an orange juice manufacturer and you have terrible oranges or not enough oranges, you're going to end up with bad orange juice. The same thing happens in the cannabis space. You need quality, you need scale, and you need access. Do you want to talk a little bit, Micah, about what you've learned about the New York supply chain and where we are in building those relationships?
Yeah. So there's, New York has a pretty good amount of outdoor cultivation permits that are active. We've been doing a bit of outreach over really the past couple of years, pre-establishing some relationships. We had a couple groups that we worked with in California for a while that left California to go set up operations, or they're like head growers that were in California that have been picked up by a few of the larger groups that are out there, which is great because we already know them. We've worked with them in the past. So we've set up some agreements with some of these groups just so we kind of have, with the sales demand that we currently have, we have the supply chain to support it. Finalizing some of those agreements right now. New York's, it's the outdoor cultivation environment is not California, so the problem that I think that I foresee New York cultivators going through is it's going to be hard to consistently bring that product to market through the flower lane. You get the weather changes pretty dramatically towards the latter part of the year, and you get freezing and rain and all kinds of crazy stuff that happens. And so you can end up with crop loss. That's not a problem for our business. Like with our business, you're freezing the material, you can harvest a little bit early. That's okay. We're able to clean up issues through the extraction process, so if they run into whatever the issue is, they don't have as much pesticide problems, or like it's not as prolific in New York as it is in California, which is great. So yeah, we spent a couple of years just kind of pre-establishing relationships, and we have a solid procurement director here in California, a guy named Evan. He's been doing some outreach and kind of getting us prepped for who we'll be talking to. And yeah, I think that it's not as big as California, which will be a limiting factor for us, but it's a starting point.
There's a level of excitement in having conversations with a lot of the cultivators in New York for LEEF coming in. That I'm not used to over the last few years, but they're definitely excited to partner and work with us going forward. So I think there's a few good relationships that we'll start to enter into agreements here, as Mike had mentioned.
Yeah.
Well, let's transition into the exciting part, Kevin, which are the financial improvements. We've talked about the most recent quarter, kind of a mixed quarter, a transition quarter, and really what I think we'll look back at and say that was the last quarter of what we can call the legacy LEEF business or the old LEEF business, meaning that we just had the extraction lab in California, we were not yet in New York, and we had not had any harvest for the farm. So things are expected to change meaningfully as a result of the farm and as a result of entering New York. Do you want to talk a little bit, Kevin, about how you see the financial results evolving over the next couple of quarters?
Yeah, I want to be careful not to provide guidance, but we've talked about having a better than base case yield off the spring. Hopefully, God willing, that transitions to a fantastic fall as well. When we start harvesting, our cost basis is in the $8 to $10 range. We are in a typically softer pricing time of the year. And so we do have that to contend with in this third quarter. However, I do expect to see meaningful margin improvement going forward. I think it's easy to say like there's before this and after this, but we've never truly had a farm in the history of this company, our own internal farm that we're harvesting off of. And so, we're going to start seeing meaningful margin impact, and we're not putting a lot of extra G&A from this time forward to achieving that. And I think that's also the key. And so, 10% or 15% year over year sales on a year to date basis increase. I think that the farm is less likely to turn that into 50 or 100% growth. It's more about how do we service the existing clients while growing top line incrementally at a better margin. So just to set expectations there, and that'll all fall to the bottom line.
Right. So just to frame it for people who might not be as familiar with us, so we've been sourcing the material from other farms, in the $20 to $35 range. We then make that into concentrates with the 3 different lines we discussed, and we sell those just focusing on California to the top brands in California. That's our business. We don't have brands ourselves. We don't do things much through distributors. We partner with most of the larger brands in California. That's how we sell our products. And so, Kevin, rather than we're not going to be bulk selling the vast majority of this flower, we're going to be turning that into concentrates at a lower cost basis. And so really Salisbury Canyon Ranch is largely a margin story for LEEF, which is great because that's the area where we've needed the most help.
Yeah, thank you. You did a better job than I in saying it. I think the other component to it that we just touched on is New York coming online and starting to have some meaningful sales here. We don't own the supply chain in New York like we do in California now. That said, it does have a better margin profile. There's more of a value add service that LEEF adds in that market in order to kind of recognize that extra margin. And so, that might not be the strategy in the long term. We'd probably want to look at getting some cultivation in the state at some point, but it does have a bit of a higher margin profile.
Yeah. And so things will start to improve for us as we're running the Salisbury Canyon Ranch material this quarter, starting to sell that. We'll start to book some more New York revenue this quarter. When you look out to the fourth quarter, Kevin, and even out to next year in 2026, how do you see the financial profile evolving?
Yeah, I think it continues to get better with every successive harvest that we have. Like I said, it took a second to pull the plants out of the ground, put it through processing, turn it into oil. We're in that rhythm now. And so when we get into the October, November harvest, and, we're still processing our spring harvest or just tailing off of at that point, we'll get into the fall, and, the fall will turn into next spring, and we're getting into that cycle. And as we get more and more acreage online, it'll only kind of get better in terms of like what we're doing internally versus externally. So it'll allow us to also have more inventory on hand. I think this is a key thing as well for top line growth. The more shelf ready inventory we can have, the more prospecting new clients that we can have, and the deeper we can go with existing clients. And so you can't do that when you're on net 30 terms with the farm and there's a big bill coming up. You can do that when you have a lower cost input sitting on your shelf for a while. So I think that'll also help in 2026 start to increase top line opportunities in California.
And so when I put on my analyst hat and I think about what we're talking about, I see top line growth, maybe more modest, biggest impact being on the margins, but we should see some top line growth, significant change to the gross margins. And then I think under that line, Kevin, we're flowing down to EBITDA if G&A stays, similar, it sounds like we should see some, decent EBITDA improvements. And then can you also talk about how that flows down to cash flow in the future?
Yeah, definitely. We do expect to achieve and maintain a cash flow positive cash flow from operations in this fourth quarter and into the first quarter and beyond. First quarter is generally our strongest quarter of the year. So I am very excited about that with the fall harvest. We've seen the margins dip, and because of that, we've obviously seen EBITDA and cash flow dip with it. And so as this first harvest starts to become oil and sales, we'll again start to get into that rhythm, and that'll lead to positive cash flow from operations here in the fourth quarter.
And you mentioned cash flow from operations and not free cash flow. And I think you did that intentionally because we have growth plans at LEEF, and we may be investing more into the business, whether that's the farm in California or operations in New York. And is that why you're leaving free cash flow a little bit more open?
Yeah. There's still 100 acres to build out at the farm. There's still incredible opportunity in New York or whatever other markets. Mike and I are having a lot of conversations about opportunities every day. And so you never know. Yeah, you're right. I did say that very specifically.
Didn't mean to call you out on it, but I think it's worth. I think it's a good thing. I think generating the operational cash flow is great, and if there's ways to make investments in the business, I don't think that's something that we should be shy about at this point. When I look across the landscape, there aren't a lot of companies like LEEF that are still in this growth phase. So I think the ability to use some of that cash flow to fund growth is actually a positive.
Me too.
Let's close out, Mike, talking a little bit about a recent capital raise that we did that turned out to be very successful and oversubscribed. Do you want to talk a little bit about what happened there?
Yeah. We initially went out, we were like, let's raise a little bit of money just to help fund primarily New York and a little bit of the effort in California. We've seen more excitement in the space in the past 30 days, I'd say, than I've seen in 3 years, which is great. And in that process, just talking to a handful of investors, we got more excitement and people coming to us saying yes than we anticipated. So we upsized the round and ended up closing. It was close to 2.1.
2.1 million Canadian. Yeah.
Yeah. And, we had some existing shareholders that came in on that round, and then we had some new people come in as well, which is great. So I guess thank you to everyone that participated. And came in to support the company. So we are, it's great. I feel like there seems to be more excitement about the industry. And I think at this point with how tough the last few years has been, it's anything's we'll take it, that's great. So I'm definitely excited about, I want to prove it kind of, meaning we've been talking about this farm and turning the business into a profitable business for too long, in my opinion. And I'm really looking forward to having a solid Q3 and Q4 so we can not what's the word? I don't know.
Not promising at that point.
Yes, exactly. I'm sorry. Thank you, Kevin. I just want to show people that, like, look, we took a bet. Everyone said we were crazy. We freaking did this farm thing and it worked. And this is going to get better from here on out. And I think that the people that came in on this round saw that, and believe in the story, which is great. So yeah, again, thank you to everyone that came in on that. We definitely very much appreciate it. Kevin came in on the round as well as myself. We both put a little bit of money into it. Obviously we're biased and we're believers in what we're doing, but wanted to participate in it as well. Yeah. So I don't know. Did I answer your question?
Yeah, yeah, I think that's perfect. I think we're thrilled to see the support from shareholders. I think we upped the round, 2 or 3 times, which is great. Closed at about 2.1 million. Really cool to see both of you guys participating. I think that's one thing that investors love to see, and we haven't seen a lot of the cannabis in the cannabis industry in general. I think sometimes we've seen people asking questions like, why aren't these, C-suite executives from these larger MSOs, doing some insider buying? Jason at TerraSend has been an exception to that rule, and I'm sure there's a few others out there that have been buying. But I think it's great to see you guys, us talking about what's going on with the business, and then you guys, being supportive and putting your money behind it as well. I think that's, a great thing for LEEF and a great thing to see in the industry. And Micah, when we're, winding things down here, when I think about LEEF, I feel like momentum is really building. And I think about us having, 3 catalysts. Maybe you could just kind of comment on this combination that I'll lay out. The business has fundamental catalysts, which is super unique in the cannabis industry right now. I'm truly not aware of another business that can change as much as LEEF over the next couple of quarters. We have potential reform catalysts. And then last, Micah, something we've been talking about more is the Bitcoin side of things. So maybe, sometimes I ask questions and I feel like I give you the answer in the question, makes your job super hard. But I know you're excited about this set of 3 catalysts that really make LEEF unique.
Yeah, I think well said. And yes, you do lob up the questions with the answers.
Is that a good thing or a bad thing?
No, that's a good thing. Yeah, I mean, look, it's been, we've been at this for a while now, and I feel like better about our position now than I think I've felt in a long time, which is a good thing. So just to your thing about just the fundamentals of the business, I do think that we're in a position to where we've got a real business in front of us now, and I'm excited to see where it goes over the next couple of years. And I want to aggressively lean into, the farm and what we're doing in New York and see where it goes from there. Maybe we end up doing another state or 2. The reform stuff. Yeah. I always say this. It's like, I'm not gonna hold my breath. I hope that something happens. It is great that they're out there talking about it in what seems to be a real way. So we'll see what happens. And if it does, I think that, yeah, we will be in a good spot if that does happen. And the Bitcoin strategy, yes, I'm very excited about it. It's something that we're actively working on right now. Currently have, not very many, but we do have a few 4 coins on the balance sheet. And you and I did a conversation, when was that, last week or something, and posted it. So if anyone wants to kind of just listen in and kind of get our thoughts on why would you do something, what does Bitcoin have to do with the business, I think, go to our page and you can take a listen to that interview. But it's something that we're actively having tons of conversations about and trying to figure out how can we put more of a meaningful amount of Bitcoin on the balance sheet here in the near future. Trying to position the company to be an innovator in what I believe is going to be a revolutionary monetary policy change that is taking place right now. People should be exploring it and really looking into it before you take an opinion one way or the other. So yeah, and those 3 things, I think we got three tailwinds that were hopefully put us in a good spot going into 2026.
And if you guys want to see that Bitcoin update, it's called the Summer 2025 Bitcoin Update. It's at our YouTube page, which is youtube.com/LEEF Brands, or just search LEEF Brands on YouTube. We have the Bitcoin video. We have a bunch of footage we've shot at the farm. And so we're building a pretty good library over there. So I encourage all the investors to check out our YouTube page. But guys, I appreciate you taking the time. We'll kind of wrap things up here. And I'll just close by saying, all stuff that's just super sincere from me, which I think this is a super exciting time for our company. I joined LEEF Brands because it offers the opportunity to invest ahead of change. And we're at a key inflection point in the business. We're really excited to show you guys what LEEF Brands is going to look like moving forward. We appreciate you joining us to learn more. Thanks for watching, and we'll talk to you again soon.
Thanks, guys. See ya.
I guess.